Welcome to week 10 of our Forex Trading School, and in this week we are going to be looking at different price action strategies for swing trading and day trading that can give you up to 80% winning rates. Okay, but before we delve into that, I want to quickly mention that the strategy that you adopt as a swing trader or probably as a day trader will be dependent on a lot of things. I adopted swing trading because my trading psychology was built on the words of a man called Fallon. In his biography, he said, the time you know you've become a good trader is that first day you were able to win by holding and adding to a winning position. This is what built my psychology. So I'm not going to be leaving a trade or taking my profit because I've made a lot of money, but I'm going to be holding to my trade as long as it remains a winner. That is, as long as I keep making money, I'm going to be holding on to that trade. I'm not going to be closing my trade because it's already 5 p.m. in the evening. Time will not determine when I close a trade. Instead, signals will determine when I close a trade. So that is why I'm not even basically a day trader. I'm a swing trader because day traders are restricted by time, because a day trader will not allow the trade to stay overnight. But a swing trader is not restricted by time. You hold as long as you still have reason to hold. So the strategy you will employ will be dependent on your goal as a trader. It will be dependent on your psychology. Don't go out there trading another person's goal. Don't go out there trading another person's objective or psychology. Build your own, and that is what this ongoing Forex Trading School is helping you to achieve, where I'm trying my best to inculcate the right knowledge so that you will be free to make your own plan. Let's start with swing trading strategies. One thing about Forex trading or the financial market generally is this: the less complex your strategy, the better. So now, remember that what differentiates swing traders from day traders is only one thing: time frame. So for a swing trader, you are looking at 3 time frames. You are looking at daily time frame, you are looking at weekly and monthly time frame. So let's look at the first and the simplest strategy for swing traders based on momentum of candle, just by looking at your candlesticks. Note that you can combine these signals that I'm going to mention. You can combine them to have what we call a confluence. That is when you have more than one signal. But I'm just going to teach you each of them, which you can also employ independently. All right. So now I'm trading a monthly time frame because I do not have time to trade forex. I do not have time to monitor. I want to take it as a source of passive income. Let's say that I met this trade here and I'm watching this candle. This was the previous month, right? So now the next month I'm still folding my hands. Next month I saw the candle close as red. That is, the bears are in charge. I will still wait to see if price will go below it. Okay, this is it. I'm now focusing on this to see if price will go below it. And then eventually price went below it. Now this is my first signal. I am now focusing on this. So the moment this happens is a signal for me that what the bears are in charge. What do? I will come in between this candle. Let me mark it with a rectangle. So you can see the red candle that I marked. I will now come in between it. When the next month opens, which is this month, I'm going to go down to say weekly or daily or 4 hours and find entry. And when I find entry inside here, my SL will be here. Personally, based on my trading psychology, I don't use a take profit because I ride trend. What I mean by I ride trend is this: as long as this market keep going, I keep pushing down my SL, I keep trailing stop. Remember what I taught you in the previous week, where I taught you about trailing stop if you want to ride the trend. Please go back. If what I'm saying is strange to you, go back to previous weeks. Don't jump any week. Okay. This is the principle of this strategy. As long as price did not come above the previous month's candle, I will keep holding my trade. Look at this. We entered inside here. Notice price came down the next month and never went above here. Let me clean up this. This is it. Price did not come above here. It came below. It did not come above here. Look at this. Price did not come above here in the next month. Okay. Price did not come above here. Price did not come above here. Price did not come above here. So these places I'm marking are the places I will be moving my SL, holding this one position and riding. You can even ride for 6 months or even more. Now, price came down, broke below here. It did not go above this candle. Now, after this very month, my SL will be here. Then look at what happened. We started having a blue candle. How many pips did you think that I captured holding this trade from here to here for how many months? 1, 2, 3, 4, 5, 6. If I add this one, 7 months. This is 7 months on a simple strategy of looking at momentum of candle. Now, this is 7 months of holding this trade. And guess what? You can even add one position every month. For instance, when I use weekly time frame and employ this kind of strategy, you know what happens? Every week I add one position. As long as what the previous week's candle is intact, the high is intact. So every week one position. If this month closes, my SL will come above it. If this month closes, my SL will come above the candle. If this month closes, my SL will come here. So if market now come and hit my SL, I have already secured all the money to this point. Do you understand? Constantly holding this simple strategy will make you a lot of money. Look at this bullish move. Do you notice that none of these bullish candles came below this candle until here? Do you know how many pips this is? Let's check how many pips this and this gave us. If, let's say, we had traded this when it happened. Now, let's say we made entry in the second candle. From here up to here is about 1,300 pips. Please, this is where you will see the pips. Just watch the middle number here. Okay. Watch the middle number that appear above here as I move this. Can you see it? The number that is moving about, you don't count the last digit. Now this is about 1,300 pips or 1,200 and something pips. So you don't neglect this. This is not a little number of pips. With this strategy or trading the monthly time frame, you are most likely to capture up to 1,000 pips. Now let's check this place. Let's say we are caught up here. We made our entry here and we are caught up here. Can you see this is about 2,900 and something pips. When you win big. When you lose, you lose. You don't lose as much as what you've won. That is why I adopted this psychology that says that the time you know you've become a good trader is that first day you were able to win by holding, and then secondly by adding to a winning position. So how do I add to this winning position if I'm using a monthly time frame as a swing trader? Is that I would add one trade every month depending on my risk management. And remember, as the month is closing, your risk is coming to zero because you are trailing stop and securing profits. All right. So let me also check if I'm not using monthly, I'm using weekly time frame. Let's see I will just be picking random points. Let's check for weekly. Let's say we started back testing from here. After we have this big momentum, we placed entry around here inside this candle, of course. So we placed our entry around here. Notice this never came below this. We have 1 week, 2 weeks, 3 weeks never coming below, 4 weeks, 5 weeks. This is the last candle. 5 weeks and market didn't come below it. And then this came above. This is where our SL is. And then we got hit at this point. Our SL was hit at this point. But before then, we have secured from around this zone to this place. How many pips? Let's check how many pips we have secured. This is our zone of entry. And we went all the way to this. Oh, sorry. That's around 1,500 pips. Okay, whenever you see a trending market, what do? Employ this simple momentum and you'll be capturing up to 500, 1,000, 2,000 pips. Now look at this again. This candle broke below. So we have this. How many weeks now? Market never went above it and then it came all the way here. So this is a simple strategy that can give you up to 80% win rate. As this market is riding down, each week that closes, you bring down your SL above it. Each week that closes, you bring your SL above it. Right? Like this, until your SL is hit, then you follow the other direction again and be moving just by looking at momentum on a weekly time frame. You can also do this for daily time frame, the same method, and you'll be capturing little pips. Look at this. Okay, let's start with this. After we broke below this, so we got our entry. This never went above this. Can you see it? For how many days? Okay, here, because this closed below. This is a bearish candle because it closed below. So up to how many days you are holding this trade? 1, 2, 3, 4, 5 days. And this is a lot of money just by trading momentum. And then let's say you joined after this closed as a bullish candle, okay? And this broke above it. You found entry inside here. Look at this. This is the last one and then it broke. Yes, you took your money from here. And then when this broke above this again, you got entry inside here. 1, 2, 3, 4, 5, 6. 6 days you held on. And then do you know how many pips this is? This is what a lot of money for 5 days or 6 days. Just this strategy, rinse and repeat every single week, every single day. And guess what? This is a very clean signal. Everybody see a lot of things in the forex market, but you must train your eyes to see one thing that had made people money over time and adopt it. Now, the second strategy that we're going to demonstrate now is based on market structure. Remember what I told you about market structure? We have types, which are what? Trends, higher high, higher low. Okay, if you don't understand market structure first, this might be difficult for you to understand. If you have not taken our market structure class, please go back and take it, because everything I'm going to be saying here might just be stories to you. I went back to around 2009, 2020. Let's back test. Now, based on market structure, we have here, we've been having series of lower low, lower high, lower low, lower high, lower low, lower high, lower low. Okay, this continued up to here, lower low here, lower high, lower low here, lower high, lower low here, lower high, lower low here, and then this is our previous high, right? And then we have a change of character, that is market going above the previous high. Now is a signal. Whenever I have weekly time frame change of character, I don't second guess it, right? So then what happens anytime we have reversal? I've told you that what we wait for retest inside the previous zone. Market comes back inside this zone, and then you look for entry. I usually use 4 hours. If I have weekly time frame change of character, then during retest I go back to 4 hours for signal of reversal to know when market changes back to what? Uptrend, because this is a sign that what we are about to reverse. Okay, let's look at it. Look at here. This is our low. That's higher high here. Now we made this low, higher low, higher low. Now this becomes, then here we have a higher high. So after this high, we made this higher low, right? And then this high, higher high, and then this low, higher low. And then we went above, higher high, like that. So if I'm trading this weekly time frame, this is reversal. This is what? Ranging. This is high, this is low. I can now employ maybe my Fibonacci level. Let me use Fibonacci to find entry. You can combine these things. So now I've just used lines to show the areas of higher high. This is our higher high. And then we have another one here. This is actually higher high. This is higher high. This is higher high. Then this is higher high here. And then we have another higher high. I taught you about valid pullback in the previous class. So you know why I call this what a high. Because this candle went below it. So there is a valid pullback here. Right. So having seen this, I can use my Fibonacci to know where the retracement is going to end. And go to mark out the zone. I'm always interested in zones like this. Below 61.8 Fibonacci level. I'm always interested in it. So once market enters here, as you can see, you go over to lower time frames and begin to find what? Entry. As you can see after here, the next week we have, if we are using momentum as your signal now, you know that what? You are making your entry inside this candle because it's now above it. And guess what happened? We went all the way high to create a new high here. And then we did what? A retracement up to here. I'm not going to call this a high. Let me clear up this. I'm not going to call this a high because it's not higher than this. So this is not a high for me. This is the high because it's not higher than this. So then this is also part of what? Our retracement. You can use your Fibonacci to find the possible place that you may want to place your entries. Okay, once you place your Fibonacci, let me place Fibonacci here now. From here to the high, this is our high, right? I'll bring my Fibonacci right inside here. What am I saying? I don't have interest on this trade until I see price come inside my Fibonacci level. As you can see, price came and touched it, and then we went to make a new high. And then after this high, I can place from here again to this new high, this next high here, this here. Okay, now as I placed it, I will place my rectangle again, 61.8 Fibonacci level. Anything inside here, I will be waiting for what? Entry. And as you can see, price dropped right inside, and then with the momentum strategy, we got a signal and we started buying up to this again, new high again, and then I will carry my Fibonacci again and place. wait for 61.8 Fibonacci again. As you can see, price came into this zone again, and then we went for what? The new high. So this continues this way by employing just market structure strategy. Once you can locate your market structure and you missed a ride to get a higher high, what do? You just wait for what? Fibonacci level. Constantly do this, rinse, repeat. Don't complicate your strategy. Just rinse and repeat, rinse and repeat. Keep doing it. You lose sometimes, but you gain most of the time. By the end of the year, you will notice that you have made more money than when you were using different complex strategies. Okay? Now, let's look at what is happening here. So, just as we can see here, we noticed a pullback here, and then we notice what? A high here, which is what we may call sweep of liquidity. We are still coming to that. We have what? Break of this low, and then we have this low. You know the implication of this? Anything happening within this place, these two lines, is what we call range trading. It's still within the range of what? Higher high, higher low. Okay, this is what? A range. From here to here is a range. So even if market dance as much as it wants, our structure is still intact. So as long as this market did not go above this or below this structure of downtrend is still intact. So we went and did all the dance, and then we came here and broke, giving a new low. Where is the high that gave birth to this lower low? This is the high, right? So we have higher low, which is what we call what? A retest. What happened there is a retest due to what? Change of character. So what am I expecting? I'm expecting that after this retracement, which has already happened, that we should come right below here. I'm expecting that we should come right below here and continue pushing down until we see another change of character again. Even the within structure in this weekly time frame, when we went back for this retracement, we have what? Change of character, retracement, high, up to this place. So we broke this low. So it shows, it is a symbol for us that we are what? We have continued going down. That is the strategy based on structure. A simple structure of higher high, higher lows. Just identify where is the previous high, where is the previous low. Then you place your retracement and capture where you should do what? Make your entry. If it is a reversal, you wait for retest, because each time that price does this, it must go back inside here, retest this zone, and then come down. Why you must wait for retest is that sometimes this might be what? A fake out. So if market continue this way, we continue going up. So you wait for retest and make sure that it failed, that retest failed, and then we go all the way down. All right, so this second strategy is simply based on what? Your market structure. Wait for change of character to know there is reversal. Hold your trade until you see reason not to hold anymore. Okay, I've just combined Fibonacci strategy with this change of character strategy based on market structure. All right, so that will be it for swing trading strategy. If you consistently hold on to this strategy that I've taught you, you have the chance of winning up to 80% of the times that you place your trade. And guess what? This swing trading strategy will help you that you will not be placing trades all the time. You are not gambling. You have built a structure around your trading. It will give you the discipline that you're waiting for these signals before you place your entry. For instance, here now, as we saw here, you are not going to place entry around the zone until you see price come inside the zone that you have marked, which is what? 61.8 Fibonacci level. When you have a price that is above 61.8 Fibonacci level, this is not your language. So you allow it. You must not take up every opportunity that comes in the market. This way, you become disciplined enough to trade the system that you have formed for yourself, and over time, you must become a profitable trader. Sometimes you can combine these two signals, but for a start, I may advise you just hold on to a single strategy or a system, okay? The simpler, the better, remember. So, see you again in the next lesson where we talk about the same system but in a lower time frame for day traders.